Good afternoon. George Cavaligos for HFT Bonds. Well, I hope you bought some kind of a dip last night. It was about the only real trade. As soon as we got in this morning, market started rallying, and it rallied right into the buybacks. We had two buybacks today. One at the usual, 9:15 to 10 a.m. time, and then another one at 12:15 to 1 p.m. The market made its high early, actually, before the noon second buyback, as equity sold off hard. But we didn't even take out yesterday's Globex highs, so I'm looking at an inside day. It's a minor trend change indicator, probably some of the lowest volume now as the rollover is almost over, so that's taken away some of the volume. It's also messing up with open interest. I don't know if you saw my tweet this morning, but with the market selling off on big volume yesterday, open interest in everything but the 10-year was actually down. That's not confirming a bear move. And obviously, we got the unemployment stuff. We've got the ECB meeting. We got the Bank of England. We got the Bank of Canada tomorrow. All these central banks. They're still center stage for us bond traders, unfortunately. And the next couple days, especially after last night's negative Eurozone PPI number, are going to be very interesting. What do we do if the ECB comes out with a negative rates program? I'm not sure they're going to do it. It might be too early, but something to keep an eye on. Their PPI and CPI types of numbers out of Europe have been very weak lately. And then the Fed argument, taper, no taper, on taper, how much taper, when taper, how much have we priced in already? I don't know. Markets bounced around in this range. We didn't do anything to expand the range today. The trend lines are still down, about another half a point, a little more than half a point below where we are right now on the support side, and about a point lower on the bonds. And the resistance trend lines, I think, are becoming somewhat meaningless because of the sideways nature of this move that we've been in for the last 2 months, 3 months. So, I'm sure we're going to sit here on pins and needles until the damn unemployment number comes out Friday, and then we'll make a big move. You won't be able to do anything, on the initial move. It'll be, instant reprice. Well, enough grumbling. Let's see what happens today. Like I said, inside days today. Those are minor trend change indicators. All they do, that signal, all that says is we should retest today's high. So 125.07 in the notes. Remember the old lows up at 125.08. That's going to be pretty good resistance. On the bond side, 130.15. Good Lord, how many times have we been, stalled either on the support or resistance against the 130.15 area? Numerous times. It's a big pivot, I guess. You could look at it that way. So, I guess we go up, we test those highs. We got another big POMO tomorrow, big buyback. ADP, employment data, a lot of PMI data out of Europe. And that's about it. That's enough. So my next favorite trade is try to buy a dip. I think if we can pull back into these sort of low volume areas, down around 129.31 on the bonds and down around 124.31 plus on the notes, try a small buy, looking for a test of the highs again, 125.07, 130.14, exit and be done with it, and that's your one good percentage trade. It's not a great percentage trade because of where theoretically you're supposed to put your stop with the inside day trade. It's supposed to be below last night's low. I would not take that kind of risk. Maybe, like I said, maybe play for the settlement from yesterday, 124.27. So 31 pluses, risking 4 ticks on the notes. Buy 31s in the bonds, risking 25s. Those aren't bad risk reward trades. If you could buy 31s, you're looking to make half a point up to 14 again. Yeah, it's not a bad trade. I like that one. I'm going to stick with that one right now. I'll see you tomorrow morning in the morning email and in our chat room. Have a great night, guys.